Ever wondered how professional traders consistently profit on pocket option while others struggle? In this video, we're diving into a pro-level binary trading strategy that combines market structure, confirmation signals, and smart money management. Stick around till the end because I'll reveal the one mistake 90% of traders make and how you can avoid it starting today. Hey traders, welcome back. I'm Your Name, here to help you master real binary trading psychology, price action, and risk control. No hype, no fake signals. Quick disclaimer, this video is for educational purposes only. Trading involves risk, so never invest money you can't afford to lose. Let's jump right in. Most beginners lose money treating binary options like gambling, guessing direction without understanding market structure. Pros do it differently. They trade with context. Before placing a trade, ask yourself, what's the trend? Where are the key support and resistance zones? Is the market ranging or trending? Open your pocket option chart and set it to a 1-minute or 5-minute time frame. Zoom out. If you see higher highs and higher lows, that's an uptrend. Lower highs and lower lows, that's a downtrend. Once you know the direction, you're aligning your trade with market flow, not fighting against it. Let's dive into the pro setup with some key indicators you need to know. First up, the EMA, or exponential moving average. Set it to periods 9 and 21. When the 9 EMA crosses above the 21, that's a sign of bullish momentum. If it's below, you're looking at bearish momentum. Next, we have the RSI, or Relative Strength Index, set to period 14. Watch for readings above 70, which means overbought, or below 30 for oversold. And don't forget to manually draw your support and resistance zones. Now, combine these indicators for confluence, multiple signals pointing the same way. For example, if price hits a strong support zone and the RSI shows oversold, that's a good sign. If the 9 EMA crosses above the 21, you've got a high probability setup for a call option. Now, let's talk about trade execution and timing. Timing is crucial. Many traders fail by choosing expiry times that are too short. If you're analyzing a 1-minute chart, aim for a 1 to 3 minute expiry. For a 5-minute chart, go for 5 to 10 minute expiries instead. Give your trade some breathing room to let your analysis play out. Avoid entering right after a candle closes at a key level. Wait for a small retest or rejection wick. That patience is what separates the pros from emotional traders.
You can have the best trading setup in the world, but without risk management, you'll still lose money. Rule number 1, never risk more than 2 to 5% of your balance on a single trade. If you have $100, that means risking only $2 to $5 per trade. Set a daily loss limit for yourself. If you lose 3 trades in a row, just stop for the day. Once emotions kick in, logic disappears, and revenge trading can destroy your account. Remember, trading is a marathon, not a sprint. Mindset is everything in trading. Pros don't aim to win every trade. They think in probabilities. Losses are part of the game, so embrace them. Keep a trading journal to track your decisions and outcomes. Over time, this builds discipline, and discipline builds profit. Trade only during stable sessions like London or New York. Avoid big news events. Volatility can wreck even the best setups. The biggest mistake 90% of traders make: overtrading. Taking 20 trades a day chasing every candle is a recipe for disaster. Professionals wait for quality setups instead. 2 or 3 solid trades can outperform 30 random ones. Next time you're tempted to click buy or sell, ask yourself, does this meet my rules? If not, skip it. No trade is better than a bad trade. Let's recap your pro framework. Analyze market structure first. Use EMA and RSI confluence for better decisions. Match expiry time to chart time frame for accuracy. Control your risk and stay disciplined. Journal every move you make in the market. Follow this plan for 30 days, and you'll see huge improvements in confidence and consistency. Trading isn't about being right all the time. It's about making smart decisions repeatedly. If If this guide helped you, hit like, subscribe, and turn on notifications. I'll be sharing more advanced strategies soon. Stay focused, stay patient, and I'll see you in the next one. Peace and profits.